Hello, mic test, mic test. Hello, guys, and welcome to the 64th edition of the Trading Opportunities webinar. This is Nirav, and good morning, good evening, and good afternoon, depending on the place and location you guys are at. Before we proceed with anything, let me know if you guys are able to hear my voice and also see the screen share. It should be showing a disclaimer currently. Let me check at my end if the audio is working or what's going on. Let me check at my end if the audio it's working fine. So it looks like everything is working. So let me just quickly run down the disclaimer here. This all content presented here is purely for educational purposes. I'm not soliciting any buy or sell. If you do go on to use the views presented here for your trading, investing, or any other purpose, then you yourselves will be liable for the risk and the outcomes, no matter how they may turn out. Read the rest, obviously. And with the legalities done out of the way, let me just give a very quick introduction here. So guys, as you already know, my name is Nirav, and I'm the admin and owner of the website 50 Eyes Market Analysis and 50 Eyes Market Analysis YouTube channel. So this is the domain I operate with 50eyes.com and the YouTube channel where you are currently seeing this live broadcast alongside with the few of the other platforms that it's currently broadcasted, which include LinkedIn. So this webinar is also currently going over there. Okay, and this, as we already know, is the 64th edition of this webinar. Yeah, as we know, 64th edition of this webinar. In the previous 62 webinars, we have figured and discussed live say trade setups, and we have got 76 plus big moves. 76 is just the number of the big moves we have caught so far in the previous trades. Right, we will see what happened with our 63rd webinar analysis in the current webinar, of course. And with that, let me just give you a quick rundown of a few more things. I'm also the author of the book called Think with the Market: Secrets to Achieve 80% plus accuracy using Elliott Waves. And I have a 6 year plus track record of my accuracy. That is, whatever webinars and videos I've uploaded, we have kept a track record of all of it. Since 2016, as you can see, we have 83.34% accuracy. By the way, this will take a little bit of time for the spreadsheets to load up. Excuse me. It will take a little bit of time for the spreadsheets to load up. So in case you want to actually check them, you can just go and visit 50eyes.com/forecast accuracy yourselves. Oh, there it is. So as we can see, 2016, the accuracy was 83.34%, followed by 2017, 87.5, 2018, 84.6, 84.88, 85, 8.5, and so on and so forth for 82.22. And you can just scroll down and check whatever I said. You can just scroll down in any of these, what do you call, sheets. Check the date when the webinar was done, the instruments that were discussed or listed here, what was the analysis of the instrument, and what happened afterward, right, with additional commentaries. So everything that worked is given a +1, things that didn't work are given a -1, and based on that, we have calculated these accuracy reports. As you can see, in this particular year, 2019, we had 73 trades which worked out of the 86 discussions, making an accuracy of 84.88. So this is, of course, above industry standards. That's why I'm showing it off. Generally, and even a 60% accuracy is considered very high. Okay. With that out of the way this webinar will proceed, we'll just discuss the Euro USD, crude, gold, S&P Nifty, and in the end, we'll discuss Bitcoin. And by the way, I have a private webinar announcement that I'll make in a bit. I'll just make it at 2-3 places because I don't know what people join and where they join. Anywho's, with that out of the way, let's just quickly remove this thing and load up our first chart over here. Okay, and I think I see, yes, there are some comments here. Let's check that. Naveen Navi. So Naveen, thank you for letting me know. And Fraser, of course, thanks for letting me know. Stock Hero, Charles is here. Got top of the day to you, Charles. Okay, so with the announcements, I'll just hold on for it. We'll just first discuss Euro USD and crude before we move on further with any announcements. So first of all, let's see what we have on chart here. So we have the 4-hour chart for Euro USD. So in the 4-hour chart, we can see that previously when we discussed this chart, the idea was that we were expecting, mainly this was the idea, from this point of reference, which is around the price level of 110.28.3, we were expecting that this market is possibly going down as a flat kind of a correction, the A, B, and the C. So we had marked out this as the wave A, and we were of the impression that the B is continuing. We had also marked out the targets for the B, which were at 112.28.7. Roughly speaking, right? Because do keep in mind the data feeds also change the targets of these things. So on the data feed, I currently have this was the target. Let me remove a few things from here. Yeah. So yeah, as I was saying, we had previously discussed this as the possible target level, and the entry was only to be taken above 1.10848. This is the red dotted line you can see, or dashed line. And before, sorry, what I was saying was that previously what we discussed about that long trade setups were only be taken if this alert line was taken out, which did not happen, right? So we are not going to see what we think is happening right now. So long setup we discussed has not fired. What are the possibilities that are new or important? Let's see. So first of all, those who do not know, a flat correction will look something like this. There will be 3 waves down, 3 waves up for a B, and then 5 waves down. So currently the analysis is stuck at the point where we are trying to identify if this wave B is still remaining with one leg up, or if this wave B is complete, let's say over here. If the wave B is complete over here, let's call this as our hypothesis 2. If the wave B is complete over here, then what we are going to see is a downward movement. If we are going to see a downward movement, then it will be a 1, 2, 3, 4, 5 for a impulse or a diagonal for the wave C down, right? So if we look on the actual chart, it is not very clear, but I think we can easily look to count this as an impulse already progressing, perhaps one leg down remaining. So in short, we can say that maybe a little bit more downward movement, and then the C will be completed, and then there will be the new leg up in the upward direction, which will take it higher than that 1.10848 level. So it will trigger our longs. So basically, hypothesis 2 is suggesting that the clear trading setup is only on the upside. So we will wait for this downside to complete, right? And then look to trade longs. Conservative longs will be above the trigger line, which is at 1.10798. And aggressive longs can enter partial positions near the completion of the wave C level if they can identify it at the completion time. So that's hypothesis 2, suggesting down and then up movement, and we will only be looking for longs. Longs only we'll be looking for in this setup. Now let's quickly look at the second setup, which is yeah. So the second setup is suggesting that the wave B is not complete here, but it is rather continuing as a complex correction, and for that we already have discussed that 1.12287 target. And if it is continuing as a complex kind of a correction, again we do not have a confirmation for it. What we'll look for is again the same setup. Actually, I'll move the alert line a little bit lower. It does not make sense to keep it at the high point anymore. So as I was saying, if that is the case, then we will look for wave B to go to the expected target level, and in which case we will wait for this alert to be taken out, and then I'll be interested in taking longs. So let's say hypothesis 1, it is suggesting immediate upside, which will then be followed by downside. So as you can see from both hypothesis 2 and hypothesis 1, the only clear indication we can have from swing perspective is for a long trade setup. So I personally, from a swing perspective, not talking intraday, we'll be looking for long setups only, and it is actually very clear. I believe everybody has understood it, but even so, if there is any doubt, please do let me know, guys, and we will check out what doubt you have, and I'll try to clarify it before moving over to the next chart of CL or crude oil, WTI crude oil. By the way, if there is no doubt, please do let us know that you understood it by typing in understood or clear or something of that sort. Thank you, Fraser, for letting me know. And with that, let's now head over to our next chart. Mr. Sharonan, I've told you in the course itself, there's a Q&A section. Just go there and post the questions. I think you have posted a question previously in the comments. I will not be answering any questions here. I'm not running the course here. This webinar is for a different kind of audience with different mindset. So with that out of the way, let's now head over to our next chart of crude oil. And there's another comment, by the way. What is it? Buhal 13, I think, 1006 first. Yes, whatever it may be, we will see. But yes, I personally think that a little bit downside is remaining, that it should at least take out this 1.107 low. But as I said, we are mostly important, or sorry, not important, interested in a proper trade setup. And Buhal also do not try to give trade setups here. We are discussing a proper systematic method here. I have discussed when to enter the long trades. I'm not suggesting to enter the longs right now. Right? People are here to keep a subjective view, not BS trade opinions or trading tips. With that out of the way, let's now head over to our next chart of WTI's crude oil. Now, crude oil has again not given us any clear trade setups or what do you call it, alerts. As you can see, it has very recently went on. Let me just do one thing here. So it has just now went on and reversed very near our alert level, which is currently placed at 73.64, right? At 73.64, we are expecting that the market, if it takes this out, will be looking for longs, and I personally think it will be taken out possibly very soon, because I'm not seeing how this can be taken as X anymore. So that basically means this X is possibly continuing as a flat, and this should be removed. So what is happening here is, I think that longer picture we have already discussed that wave Z is possibly continuing is over. Yeah, we have discussed that in the last webinar. So two views we have discussed. One is that wave Z is possibly continuing. That basically means this market will remain sideways within this range and then eventually break lower going for Z. All right. Second view is that this is not going to happen, and the Z is already complete here, and that basically means this market should fly high. Now we do not currently have a clarification of any of these things, right? So one thing which is clear in my understanding is that this market seemingly has one leg up remaining. Now from which angle is it having that one leg up remaining is, let's see. So even if it's continuing sideways, or even if it's going to go straight up, I can see that this thing looks much more like a zigzag kind of a correction. So in Elliott terminology, the zigzag will be something like this. So the first leg up is the A, followed by the B, and then the C. In this particular case, B might be here, maybe going sideways, doesn't really matter. We'll be looking for C to the upside. And as such, the C wave should at least take out the high of the wave A. We have our alerts placed a little bit lower than the wave A high, right? So this will be what you will call the length of wave A, and generally to figure out the targets of wave C, we will take a projection of it and we will take the 1:1 level. We will take the 1:1 level or 61.8, and there are other multiple levels. But long story short, uh, once this alert is taken, this will result in a very, very quick short-term scalp. Okay, so the market will give us a very, very small window of long trading opportunity, which is simple and clear. So that's one thing to look out for. on crude oil. And other than that, if we are, as I said, trying to determine the direction, it is really not clear. And the fundamental news, well, I am aware of it, but we are not doing fundamental analysis here. And I'm aware of US stockpilings and Russia's announcement and everything. So, with that out of the picture, with that being considered, it is still unclear which way this market will be taking or which count this market will be following. So, for the time being, I'll be sticking with my short-term trades here. I will not be going for any swing opportunities on this counter, right? So that's my take on crude oil. Nothing very special, nothing out of the ordinary. Let me know, guys, if you have any doubts or queries on this counter before we move over to our next chart. Roughly 10 points. So we can expect at least 5 points in the upside. So per se, the target minimum will be not that big. It is coming around the level of 74.50 is our target minimum. Thank you for the confirmations, Charles. And now let's head over to our chart of gold. Which is actually been a blast of a trade. And I'm not sure if you guys were able to check it, but I'll just quickly point out one quick thing here. I have recently uploaded the latest trade, which was based on the analysis we did on gold. Let me check what it is. So yeah, the analysis which we did on gold was, first of all, let's discuss that very quickly. Thank you, Fraser, for the confirmation. So the analysis was, as we can see here, the analysis was that the last discussion was on date of 12th of May 2023, and the price at that point in time was trading around this level, somewhere here, right? The analysis was that I was looking for shorts only below this yellow trend line, and specifically we had an alert placed over here somewhere. Now I don't recall the exact level. It must have been around here, but the thing is that I do keep changing those alerts as well. But the point is that somewhere evening time around, it got triggered, and after that I entered some short trades which were not small by any means. So the trades went like this. I have uploaded actually the whole footage. This was a trade I was in for about 1 or 40 minutes, roughly speaking, and I have made a time lapse of it over here in the short section. So one second. If you go to the channel 50 eyes market analysis YouTube channel and click on the short section, then you can check this short out, which is $58,000 profits on gold, and this is the live trade recording. I'm not sure how much clearly is it visible, but this is a live running trade, and I had the recording on, so I have created a time lapse of it. So there were two legs I went in on this trade, 50 lots and then 50 lots again when I was 100% confident. There's one cool thing about it. With this recording, there are some things which we generally do not catch. But with this recording, you will see that at no point in time the loss went more than, I think, 3,000 something, roughly speaking. But the profits were always 4,545. It was an exceptionally good opportunity. The market remained below a sell wall all the time, and that's why I added more trades. So yeah, this brings me to the announcement. By the way, let me remove this. So the announcement is that I'll be conducting a private webinar for those of you who are interested in checking out this whole trade in complete detail. Also, the current trading account we have is up about 40%. So other than this trade, we will also check the other major trades I have pushed on that trading account. So those of you who are interested in checking the whole thing out in complete detail, again, I will be going over the broker statements and actually diving into the terminal and everything. So this will not be made public, right? Because it contains sensitive information of financial nature. So if you are interested or serious about becoming a part of it, then you can quickly go to the website 50eyes.com, and on top you will find the webinar registration link. Once you click on the webinar registration link, you will be presented with a small form here. You just have to fill it, and you have to just push in the email and the country, and you will get a revert on your email about the webinar details. And as such, they will be conducted on 21st May, which is Sunday. And I wanted to do it today itself, but we need an audience, and I had not gotten the time to make the announcement early on. So again, it will be exclusive and it will be live only. So if you are interested, you can visit 50s.com/webinar dash registration and push in your details. 21st May 8 p.m. and that will be 2:30 p.m. GMT. Yeah, there it is. 2:30 p.m. GMT and 10:30 a.m. Eastern Standard Time and 8 p.m. IST. So you will have to, again, as I said, be available live if you want to become a part of it and if you want to discuss the whole thing in quite detail. I will decipher the whole thing because see, over here what we have is just time lapse, but in actual I have the whole recording and the sequence of trades and the sequence of analysis. So we will be breaking down bit by bit. It is the kind of discussion I generally have with the students in my private webinars. That is the training program LT webinars. Okay. And with that, this also brings us to the announcement of the new batch. So if you are interested in joining in the new batch, this will also give you a sneak peek of the kind of discussions and the kind of knowledge that flows in our actual classes. So again, as I said, make sure if you want to join in live because that's the only option here. And let's now head over to our actual. By the way, I'll push this link. Where is it? The webinar registration page link. I'll push it in the description of the YouTube video. Otherwise, as I said, you just go to the website and 50s.com, and on the top you will find the link. Now let's head over to our actual discussion of the chart of gold. So in the chart of gold, we had this discussion already running. So it triggered our bearish bias as it went below the yellow line. And then based on the strong counts and other confluence of factors that I look at, I took short trades, which we discussed. So now what is the bias? What is this market doing at the current point in time? So let's quickly check a little bit higher time frame. Let's head over to 4 hours. Now see, this was the first sign of weakness, the yellow trend line or breaking of the yellow trend line. The second sign of weakness will be the red trend line. Now this one could be a tricky one. Maybe the market will go down here, make a correction, and then fall. That is basically the general expected way. It's not always going to do that, but if it does do that, then we will have a very clear setup. So now coming back to the 1 hour chart, what we are going to look for is, again, we will look for selling highs. That is, we'll be looking to sell pullbacks. Currently, it looks like we are in an impulse which has one leg remaining to the downside. So I am under the impression that this market will first at least test the red trend line or break below it. If it does any of those things, that will validate the count that it is possibly a wave 3, followed by the correction in the upward direction for wave 4 and then a wave 5. Again, these things can change because it has given quite a strong move here. It is also possible, just pointing some possibilities, that the market decides to test this trend line. So that will give us a very, very good risk to reward opportunity if the market really does come here to test this trend line. The risk will be very small in that case. Let's say over here somewhere. Speaking, it will actually depend on the setup at that point in time. We will have to read the price action at that point in time. But currently, I'm thinking around 2020, 2022, something we will be having the stop loss in case if it comes back there. So I do not know if it will go straight down or it will go up and then down, but my bias is currently bearish and I'll be looking for bearish setups, right? There is the possibility that we can take small shorts here and keep adding if it goes up, as it goes up, sorry. And that is something I can do given that the account is already running in extreme profits. We can start by building a small position and adding on top of it, right? But again, based on your risk profile and account size, the trading style will also vary. So that's our analysis of the gold. We are looking for selling to continue in this counter, and we want to see a break of the red trend line or the retest of the yellow trend line. Nothing new to add here. I've discussed all the main possibilities that are coming in my mind at this point in time. Let me know if you guys have any specific questions on this counter. And yeah, as I said just before, if you want to see the whole trade, how I managed the whole setup, which led to $58,000 profits, just register to the webinar registration page, and I'll talk to you on Sunday. So guys, if there is no doubt, just do quickly type in clear, and we'll move over to the chart of S&P's 500, which will be followed by crude oil. Sorry, why am I saying crude oil? Nifty, of course. Okay, let's see the comment section here. By the way, this also brings over tally of number of trades that were out to, let's see, what is it? Yeah, currently it is 76. It brings it to now 77. Okay, so now let's head over to the next chart. Thank you, Fraser, for the confirmation here. And let me quickly load S&P's 500 on screen. It is also following the counts as expected. Thank you, Charles, for the confirmation. Oh, Charles has already registered. No questions registered. Well, you are quick with that. Okay, so with that out of the way, now let's head over to our next chart, S&P. As we said, we have a very clear count, which is, by the way, doing things as discussed in the last webinar. So now let's quickly check what was the discussion and how are things proceeding. So first of all, in the last webinar, what we discussed was, let's check the date, 12th was here somewhere, right? Somewhere here we did the discussion, and the ideas were two. I have not removed or changed anything. It is exactly the same chart as discussed in the last webinar. So the first thing was that we had first a leg down, right? First we had a leg down, and then we had a leg up. That was the main count we had, or the main expectation we have or had of this market. Secondary expectation was that nothing like that was going to happen and it will head straight up. So again, I'm not sure of the exact level I had alerts placed, but they got fired up. I did take some trades, but those were minor and those were not. They did not enter into plus at any point, so I had to exit. Again, we will look at those losing trades as well, and how the account went to 40% plus profits almost within a week in the Sunday's private webinar. So yes, getting back to the point, the downside possibility never got triggered because, as you can see with this dashed line, right, which is placed around the price level of 4090, we never got the trigger of this thing fired up, so we never entered any shorts. On the other hand, the upside trigger, wherever it may have been, got fired because it has eventually taken the high. So it got fired up. So what's it doing now? Now let's quickly check. Of course, this being a 2 is now a possibility. And there's another possibility that, let me remove this to here. Okay, so now what I'm saying is that currently we have two possibilities now. The first one is that this wave 2 is continuing as a flat kind of correction, and in a flat kind of correction, you would expect that the market will go like this, down, up, and then down. So it can come down and can possibly go. Actually, it should, in my understanding, if it is going to go like a flat, I think it will go within this zone somewhere, right? So if it goes within this zone somewhere, then minimum we can expect is the top of the zone, which is around 41.53, right? Bottom is a less likely possibility. If the market is bullish, is like super bullish, then it's a lower probability scenario. Okay. So long story short, S&P 500, we are expecting that the bullish movement will continue, and worst case scenario, or not the worst case, the little bit of secondary scenario or secondary hypothesis is that the market will give a pullback and then continue to the upside. Both of them suggest swing perspective longs, but I currently am not very interested in taking swing longs on this. I will be extremely interested if the market really does come down to the suggested levels around 41.50 or lower. So for that, to not miss out on that trade, I am placing the alerts above this range of 41.53 something. 41.53 is our area of interest. If the market touches that, then we will be interested in looking for long trading opportunities, and very simple setup. Again, I'm not going to discuss the aggressive setup here because that requires on the spot analysis. I will have to check the chart at that point in time. So the secondary setup is, or the conservative setup is, that if the market really does go to 41.50 levels and then starts reversing, we can just enter the longs at the high. So we can place an alert at that point in time over here. So that's the simple setup on S&P, and of course we can enter longs when it reverses. Wherever it reverses from, it can also reverse from a little bit lower level. So again, as I said, that will require me to look at the chart at that point in time on screen. So if the alerts get fired up, I'll just open the charts and check how things are proceeding. But as far as things are considered, this is what we are looking for, and this is the setup. Hopefully, this is quite self-explanatory and clear. If not, do let me know by typing in your question, and I'll make sure to see how I can clarify it before we move over to our next chart of Nifty 50, which will be followed by the last chart of Bitcoin. Well, thank you, Fraser, for the confirmation. What about the other participants? I seem to be seeing there are quite a few people here, but the number of comments are not that many. Thank you, Charles, for the confirmation. Okay, so with that out of the way, let's now head over to our next chart of Nifty's 50, which is 3318. Thank you, Luis. And let's see what this thing is doing. Where is that? Yep, there it goes. Now we had a very, what do you call, major kind of update last time when we discussed this chart. And the update was that if the market, let's just quickly check the date, 12th May, right? So on 12th May, we discussed the trading setup that if the market opened gap lower below the red trend line, then we'll be interested in selling it because we were expecting a diagonal formation. Now that did not happen, and quite on the contrary side, the market forget gap down. It opened within the range of the past one or two, yeah, 1-2 sessions or something, 3 sessions maybe, right? And then it rallied up. Later on, it did break the trend line. So again, I never really did anything extra here. The setup was exactly the same, right? The red trend line being broken to the downside is the setup. There is nothing new that I did on this, and it got broken and initiated sells. Now I have taken trades here and there within this range. I have taken trades within this fall as well as this fall. This one was the most profitable actually on 17th May. So, anyways, now let's see what's the picture here. Currently, there are two outcomes to the possibility we are seeing on screen. First is that A is here, the B is here, and the C is complete, which actually is quite possible, even though C is quite small because of the nature of the C wave. Right? I know it's a bit of unclear structure, but we can look to count for 5 down in the structure. Anyways, and the second possibility which I am more in favor of is that this B is continuing sideways, which will be followed by a C down. Right? Why am I in favor of this? Because as I said, the two things. First, the C is looking not that big compared to the A. Generally, we look for two things. We look for 1:1 or 61.8. I don't think it's any of those, but although let's check very quickly here. Perhaps 61.8, somewhere near it is. Oh, it has crossed 61.8. So we must be on the log chart. Yes, log chart. So, anyways, it has done the bare minimum, which means that C here is a possibility. We cannot ignore that. What that means is that this market can head straight up. Let me remove the clutter. And what that means is that confirmation will come near the wave B high, which is around 18 to 86. So around this level, the market will confirm that yes, swing longs are incoming. Unless, of course, it's a running flat structure. Sorry, expanded flat structure. So yeah, that's a possibility, but I don't think we are going to discuss that. We'll just look at it in the upcoming sessions and how it performs. So long story short, C complete is a strong possibility, and the market going up is a strong possibility. This is further supported by the bullishness inside Bank Nifty. Second thing which I'm seeing here is that if the B is continuing sideways, then we will be interested in taking shorts, and I personally will be interested in this market below 18,100, let's say 18,110 level. So below this level, I'll be interested in taking some shorts on the counter, right? So long story short, Nifty, wait for longs or shorts, both possibilities exist. A little bit bullish bias because of Bank Nifty, but overall we are trading Nifty, so we have to look at things from its own angle, and which is currently suggesting that both possibilities are quite strong and we have clear levels for both of them. So with that being said, I don't think there is much to discuss here. Yes, there was actually a few points. We had to take a look at the possible target levels, which I think we may have discussed earlier. So for downside, yes, the downside, the minimum target has already been touched, which is around 18,073. Again, adding to the bullish possibility. Immediate short-term target is 18,044. Will only be important from intraday perspective. And swing perspective, the next low is around 17,840, which is way too low. If the market is extremely bullish, then it most likely will not even come into picture. So these are the downside targets. So for our analysis, 18044 is the important one. Nothing much to add here. Let me know, guys, if there's any questions or doubts before we head over to our last chart of Bitcoin. And yes, if you are joining in the webinar in the middle, then I'd like to again do the announcement very quickly here that on Sunday at 8 p.m. IST, we will be hosting a private webinar where I'll be checking out how I achieved 40% plus gains on this account with the gold trade in great detail. And what gold trade I'm referring to, I'm referring to this gold trade for which we have uploaded a time lapse short. So again, all of this discussion will be private because we'll be looking at the broker statements and everything in by logging in the terminal, etc., etc. If you are interested in these kind of things, you will have to make time and join in live at 8 p.m. IST, 2:30 GMT or 11:30 EST. Date is 21st 5 2023. Here is the registration page, 50s.com/webinar registration. Okay. I don't see any questions or doubts here. So in that case, let's quickly head over to our last chart, which will be the chart of BTC. So in the chart of BTC, what we did last time was, one second guys, it seems like I'm having a issue here with, yeah, there it is. Okay, so now I can see comments. Thank you Fraser for the confirmation. So yeah, as I was saying, in the last chart of BTC, what we were discussing was that the market is going down for a A and then sideways for a flat, and then it will head down again for a C. And there were two things very clear to us, that we will not be taking any longs until the market goes to the target level, which is marked by this first white support zone between 25,311 and 23,994. Let's just say 24,000. 25,3. Well, it comes out different every time, doesn't it? I'll just give you a rough idea: 25,340 and 24,000. Okay, so we do not have any intention to take any kind of long trades until the market goes there. And as such, we discussed the short trading opportunity and the idea that this market can go a little bit up before falling. So what is happening here? I have actually never touched this chart after that analysis, which we did in the last webinar, because it has not done anything special or unique at all. So last time when we discussed, let's just quickly check the date. The date was 12th of May. So we actually were able to spot the perfect low. Well, that's good, because after that, the market went up, and that was the analysis that the market will head up for wave C. So this brings our tally to 78 trades got in the last webinars. So what I'm referring here is that in the last webinar, the analysis was that this market will go up for wave C from this what do you call support level or target of 25,830. So at that point in time, the market was already around 25,830, because the analysis was done around 12th May, and this level was marked. So it has gone up, right? So now how it is proceeding, let's see. Other than the fact that we caught this small, a part of the small move in analysis, let's see how it is progressing. So firstly, this does not look like a C of any sort. Generally, a C will have a clear 5 waves inside of it. We can force the counts here, but it is becoming too much forced over here. So what I think might be happening is that we may be seeing a sideways, maybe a triangle here. What does that mean? It does not mean much of anything in the upside. It means more that this market is forming a clearer seller side bias or sell setup. Trace, we can take our, we can always take a trade below the trend line ACBD, sorry, the BD break, but we do not have a clear A, B, and CD setup. So long story short, we'll be looking to enter shorts, short-term sell below 25,912. So that's where I'll place an alert. Again, as I said, we are not interested in any longs on this counter. Either it follows our plan or it does something completely out of the ordinary for us to consider any longs for now. So with that out of the way, that's our setup. We have already discussed the targets and the possible progression we have discussed as well. So nothing much to add here on BTC. It is pretty much, it's actually quite clear as is. Let me know if there's any doubts or questions regarding this particular chart. If not, guys, we'll conclude this meeting, and I'll just wait for a few seconds in case somebody has any questions. And by the way, as I said, if you are interested in the private webinar, I'll just push the page on screen. So this is the registration page. This is the URL. It's also available in the description of the YouTube video. With that being said, I'll consider this webinar complete, and thank you guys for joining in. You're very welcome, Fraser. And thank you other participants who were sort of silent or some who joined in the middle and then left. It was nice talking to you guys, and I'll see the serious ones out on Sunday in the private session. So That's it. Talk to you guys soon.